No, you're welcome.
We still have some people joining gradually. It's often on these calls, it can be up to 5 minutes, but I've started the recording. So, okay, I suggest we get started then.
Okay, cool.
Anyone that joins later will have to wait. We'll just have to catch up on the recording. So, good morning, everyone. Thank you for joining today's session. And as I've said to everyone, this is the first in what I hope will be a series of thought-provoking conversations, which are aimed at helping to shape our long-term product strategy. I'm especially pleased to kick off with someone I've had the privilege of working alongside for nearly 3 decades, Dave Birch. Dave is one of the most respected voices in global financial services strategy. He began his career as a developer, including as part of the original Mondex team, the creators of the world's first digital offline payment system. Since then, he's developed into a highly sought after speaker and advisor. Hang on, who's that speaker? Just mute Phil. Um, and he's helping financial service providers around the world, including the international card schemes, to navigate the shifting landscape of payments, identity, and resilience. And back in 2004, when few others believed in the promise of M-Pesa, Dave was the board level supporter who made it possible for us to pursue that work. That's one of the many reasons I trust his instincts. He's insightful, sometimes provocative, always engaging, and never short of a story to make you see things in a new way. In today's session, I think he'll be looking at the challenges just over the horizon, from the role of AI and tokenization to resilience in an age of cyber attacks and geopolitical instability. So, with that, I'm delighted to hand over to Dave Birch.
Thanks very much, Paul, and as a very kind introduction, thank you. You know how much I respect you and your work. Those are very kind words too. Thank you.
Thank you.
Um, yes, so the idea here is to sort of have a high level conversation, looking at the key strategic issues on the financial services side and focusing on the ones which I think might impact some of the work that you're doing. And I think that, and obviously this isn't school, so I mean you can take this conversation in any direction you want. As Paul knows, I can be infinitely boring across any axis on these topics. So please, by all means,
Thanks.
put questions in the chat or put your hands up, and I'm happy to go in any direction you want to take it.
Thanks.
But just as a sort of framework to sort of get the discussion going, I would say a useful way of thinking about things is in the DPI, the digital public infrastructure context. So I think that this is a useful framework for thinking, and it gives us a way of breaking down these issues and making some of them manageable. So, and as I don't need to tell any of you, so DPI has the three components: digital payments, digital identity, and data exchange. So if we start on the digital payment side first, um, I don't know how you guys see things. I don't know how you view this, but I would say there are probably it's a bit so because I actually wrote a book about this a few years ago, so it obsesses me. Um, so I would say there are a couple of things which seem to be coming true as the sort of general future. So the first thing is the rise of stable coins has been a very, very significant thing over the last few months and is starting to shape a lot of people's thinking about where the future is going to be. So, and the reason for this is that, uh, and I hope I'm not treading on any toes by saying this, most people in most of the world, most of the time, want dollars. And to an extent to which there's been a demand for cryptocurrency and other alternatives to the conventional financial system. I've long thought that that was really a proxy demand, a disguised demand for dollars. If you went to like, I mean, a few years ago, you probably did the same thing as I did. You know, you go along to these Bitcoin conventions, It's a bit like the moon is or something, actually. It's a bit of a sort of cult. Um, and they talk about, oh yes, but look at the demand for Bitcoin in, Argentina or Turkey or, places like this. But I thought those things were never really a demand for cryptocurrency. What they were really a demand, but people in Argentina didn't want Bitcoin; they wanted dollars. And insofar as they wanted Bitcoin, it was a way to get dollars. And I wrote a book called The Currency Cold War, in which I said that the dollar is going to permeate a lot of economies because of this. And I think this has come true. I was in Turkey at the start of the week. And in Turkey, the premium for dollar stable coins over and above even dollars, US dollars or dollar denominated bank accounts is already sort of 5% and growing. So every piece of evidence we have says that the dominant thing right now is the growth of stable coins. I was at an event yesterday, Digital Money Summit in London, and they were talking about cross-border payments. And there was a chap from Swift. And there was a lady lawyer sitting next to him who made some very, I mean, her language was very, so she said they were, this is all about chopping out the middlemen. This is while she's sitting next to Swift, which I thought was a slightly injudicious use of the language. But you sort of see the point. When I was at Money 2020 in Bangkok earlier in the year, I was chatting to a guy there who imports steel, and I'm just chatting to him at lunchtime. What do you do? Oh, I import. Then one of the things I do is import steel. And I'm like, why are you at Money 2020? And he said, well, because my suppliers want to be paid in tether. This isn't people buying shareware. This is
Mhm.
this is this is people buying container loads of steel. I think from India, but I can't remember. Uh,
To give you some
there are.
context, to give you some context in for Mojaloop, we are looking very closely at stable coins for the settlement of cross-border transactions. That's
Well, I think that's a very wise step, because I think if you look at the toolkits that are available around stable coins, it's significant and growing. And there's a couple of other factors there, by the way, as well, which isn't just people using it. You mentioned AI in passing. AI is by far the dominant. In fact, I can show you. I can remember I showed you that slide with that diagram on it of so I'd forgotten to load PowerPoint, but I'll find that slide for you to illustrate the point. If you think about the way that AI is already developing, so what you see is that we have a situation where the the people who've already started companies in this space, the people who've already got VC funding, the people that are already building in the AI to AI space, they have no, I wouldn't say no choice, but they've all opted to use stable coins. So in this new world of AIs paying other AIs, AIs can't have bank accounts, but they can have crypto wallets.
yeah.
So they're all using stable coins.
Mhm.
And also, if you're an AI, if you're trying to work out, do I want to get paid in Dogecoin or Bitcoin or, whatever, you're taking a gamble because you don't know what those things are going to be worth tomorrow. So, yes. So my first point is you have to have a strategy for stable coins because they are, you know, certainly in international and cross-border, they're a key thing. Um, and also in this future kind of AI world, they're dominant there as well. I remain slightly skeptical about the crypto. I'm not skeptical about the stablecoin side of things. I am still a bit skeptical about the cryptocurrency side of things. And one of the reasons why I'm not skeptical about the stablecoin side of things is because there is a much bigger picture to do with digital assets here, of which stablecoins are a subset.
Mhm.
If you look at the Bank for International Settlements Finternet, which is, their, the central banks. I don't know if you looked at
We
this
have
at
been
all.
actively looking at Finternet, yes.
Yeah.
Yeah.
So if you look at the bank, the BIS Finternet, they, in fact, I've got a I've got that diagram here as well somewhere. Hold on. Uh, I should have loaded all these up first, really, shouldn't I? I didn't even think about that. If I share, is there a way of me sharing my screen
Be
here?
able to. Yeah.
Right. So can you see that? That's the BIS Finternet. This is my simplified diagram of it. So if you look at the way that works, what they say is our vision of the future, which actually maps to the DPI thing quite well, is we see a world of essentially digital assets. We see a world of tokens. We see a world of trading without clearing and settlement, connected through ledgers. But notice what's appeared at the infrastructure level, which wasn't there before. So the BIS now say that digital identity is part of that fundamental infrastructure, which we'll come back to in a moment. So if you look at the sort of digital asset side of things over here, the tokens, stable coins are a subset of that. And so that's why I feel very confident about being bullish about the stablecoin things. The bigger digital asset picture, I think we're not yet seeing. I mean, I probably sound very kind of techno optimistic about this sort of thing, but I don't think we've really begun to take on board just how big that is. So if you look at the serious money people, like the Black Rocks of the world, um, they're already pushing into digital assets and tokens. And it's not because of any kind of ideological thing. It's not because they care about sort of decentralization and stuff like that. It's because they don't want clearing and settlement. It's just a straightforward economic thing. And if you think, like, for example, if I sell Paul a share in Apple, if you think about what happens if I sell Paul one of my Apple shares, you're in this world of brokers and dealers and market makers and front office and back office and delivery versus payment and delivery versus settlement and error accounts and and all this kind of stuff, which costs money. And alternatively, you could imagine a situation where he sends me money, I send him an Apple token. End of story. That's it. There is no, the rest of that stuff vanishes. You're not talking about a 5% or a 10% reduction in costs. You're talking about a 70% reduction in costs.
Because
So
with the token, it essentially becomes a bearer bond. But
exactly. And so this is why the serious money people say it's not ideological. It's kind of economic. So you go from stable coins to this bigger picture of digital assets being exchanged. I think the BIS are right about this. This idea that you have this new generation of value-added service providers that will sit on top of that, and that sort of seems right to me. I think some of the implications of that are, and I'll give you a couple of examples. There's a lot of work been going on about central bank digital currency around the place.
yeah,
Now, I'm one of the maximalists on the central bank digital currency side of things. Paul mentioned Mondex. One of the key points about Mondex was that all of the transactions were essentially offline. All of the transactions were device to device. And I think if you're going to create a central bank digital currency, it has to be a workable alternative to physical cash. In other words, it has to work person to person for all sorts of reasons to do with resilience and
yeah,
everything
yeah,
else.
yeah.
But it has to work person to person. So I mean, this might sound an extreme statement, and I'm curious to see what you guys think about this, but I kind of think there is no point building a digital currency, a central bank digital currency. There's no point building it at all unless it works device to device. Otherwise, you might as well just have, pre-authorized debit cards,
So,
basically.
so what's happened then? Because one of the reasons Mondex wasn't a success was because there was no visibility of transactions to regulatory authorities.
No, no, I'm not sure about that. I mean, remember the transactions were offline, but the audit trails weren't. I mean, you had to be able to look at the audit trails because you
Yeah,
had to be able to tell that the system was working properly and hadn't been.
hadn't been compromised. I
I
see.
think there are other reasons. Just say like it was too early, but the point is, I think the rise of stablecoins is causing a rethink on the central bank digital currency side of things. there are quite a few people who are saying, well, if we're going to have stable coins, why bother with central bank digital currency? I don't agree with that because I think central bank digital currencies and stable coins have different requirements, different goals. I mean,
Yeah,
central bank digital currency are elements of social policy. I mean, a central bank digital currency has to meet requirements that stable coins don't, which are to do with, financial stability and inclusion and all these kind of things. Stable coins are purely a kind of economic instrument. They don't have a social policy connected to them. But yes, I think it's making us rethink all that kind of thing. But I also think, we can't shy away from the fact there's a political angle to it. People talk about de-dollarization, the BRICS, looking for alternatives to the dollar clearing system. But what's happening on the ground is that because almost all stable coins are dollar denominated, what you're seeing is quite the reverse. You're seeing the dollar penetrating more and more areas of economic activity. And I can certainly imagine that in some countries, I mean, if I'm the Minister of Finance in a country where all serious economic transactions are being carried out using dollar stablecoins, then what I think about interest rates or monetary policy or whatever, it starts to become a bit irrelevant.
yeah, yeah.
Um, and I know it's a sensitive topic. I don't want to sort of sidetrack into it, but yes, but we can't ignore that side of things. On the on the cross-border side of things, I don't know. It seems to me that the stablecoin stuff is accelerating, very rapidly. And as the lawyer said on stage yesterday, she's seeing a lot of significant transactions going over to stablecoins. So in a way, it doesn't matter, you know, Swift. I can't remember that, but I think their current statistic is that 99% of all of their transfers happen within an hour or something like that. And
What
so
do you do?
yeah, but the thing. So they've put the effort into speeding things up, and I don't deny that they have done that.
Mm.
But to an awful lot of people, it's like they don't really care because they don't want to use it at all. It doesn't matter whether it's fast or not. They don't care. And we've come from a world where we've talked about electronic bills of lading and smart contracts for insurance and all this sort of thing. But out in the real world, the guy's there with his wallet, container load of steel shows up. He sends the guy 100 grand's worth of tether or whatever it is. Container load of steel doesn't show up. He doesn't send the guy anything. That's it. There
Yeah,
is no, you know, smart contracts linking bills of lading to insurance. And
yeah, yeah. But one of the
I
things
don't know if
what
that's what you're observing, but that's from my perspective. This
yeah,
is this is what I'm seeing right now.
yeah. Well, one of the concerns we have around this is that the stable coin has to be stable relative to some basket of other assets. And when we're thinking about currencies across Africa, for example, to finding a stable coin which is relevant for those various economies is difficult.
It's difficult if you're the government. I think if you're a farmer who you buy your fertilizer from China, you buy your tractors from China, you buy your other things that farmers need from China. You grow whatever it is farmers grow, soybeans or something, and you sell those to China. Then actually having digital yuan in your wallet is, why do you want other intermediaries if you
Well,
do most of your. So I don't know. You spend more time on the ground than I do, Paul. I mean, I'm seeing this from a distance, but I really do see the rise of stablecoins as the dominant trend in this space at the moment.
mhm, yeah. Yes, and as I say, we do actually have a group of us who spend a lot of time thinking about this, and we have actually kicked off we have formal work streams, and one of them is actually spawning up a number of projects all around the use of stablecoins for settlement. Well, trying to look at other mechanisms for settlement of low value transactions cross border, for example. So because our use case isn't a remittance of $100, it's spending $5. Imagine crossing a border, near a nearby border, and completing transactions there. How can we accumulate those transactions economically in order to do to efficiently settle all of those transactions? So that's a lot of the work that we're doing at the moment.
What's your conclusion on that at the moment?
Well, we don't know. We're still working on that. We looked at conventional stablecoins a while ago, and there were three of us working on that, and we couldn't see that our principal issue was the potential fluctuations of these so-called exotic currencies versus the dollar. So what do you actually stabilize against in your stablecoin, for example?
No, no, it's a valid point. I can see that exactly.
Yeah, yeah.
But I'm just starting to wonder if the fact is that the stable coins themselves, the dollar stable coins themselves, are going to become so dominant that yeah, I don't know.
Yeah. I mean, a lot of the problems with cross-border transactions, even remittances, particularly across Africa, is that you'll start off a transaction in one currency, like the naira, and it'll immediately be changed into dollars. And then when it's finally settled into Kenyan shillings, it only happens at the last second in order to avoid spending any time in the exotics and
Mm.
just spending as much time as possible in the dollar.
No,
But that means you get two forex transactions, which puts up costs.
but it's a small step from that, from spending as much as time as possible in the dollar to spending all the time in the dollar.
Yeah.
Um, sorry. Okay. So next point about patents. So hmm. So talking about sensitive issues, and obviously this is just
And we're always up for talking about sensitive issues.
okay. So the other thing that's cropped up is this issue of resilience. So on the one hand, you've got this shift towards the dollar and dollar stable coins. Uh, and and we associate that kind of dollarization, dollar stablecoin dollarization, sometimes with sort of emerging markets. But actually, there are people in developed markets now who are starting to think, I'm not sure if we have the resilience that we need in our payment systems. So I was in Canada 2 weeks ago. 6 months ago in Canada, the idea that you would need an alternative to Visa and MasterCard was, ridiculous. 2 weeks ago, that's what people were talking about. In Europe, the Commission has had three failed attempts to try and create a pan-European card system that's not Visa and MasterCard. That suddenly has renewed energy. In Australia and New Zealand, they were talking about how to strengthen the domestic schemes. Not every country has a domestic scheme, but we do. And it seems ridiculous to be in Canada and looking at what Russia has been doing with Mir or what Turkey has been doing with Troy. I mean, that seems a crazy world. But actually, this issue of resilience across multiple axes has become quite a big deal. And it's been accelerated in recent weeks because you probably saw this stuff about the power cuts in Spain and Portugal.
Yeah, yeah.
Um, there's been issues, there were the fires in California earlier this year. Um, so something that probably wasn't predictable a year ago. I mean, we used to think about resilience in our kind of. You remember Paul and I both come from a consulting background where we had a very structured approach to risk analysis. And so you would work through this kind of step by step. But one of the things that was in that risk analysis wasn't, America decides to turn off dollar clearing, um, you know, or you get in a dispute about the price of maple syrup, and all of a sudden you can't use Visa and MasterCard in Canada anymore. So, so it's not just the kind of resilience to natural disasters. It's also this issue about resilience to, sort of political action as well. And so, in many parts of the world, and which are not emerging markets, now you're beginning to see these discussions. I don't know if you probably don't follow this stuff as obsessively as I do, but in the last couple of weeks, Finland, Norway, Sweden, Estonia have all said they're going to start moving to offline versions of the domestic systems. And I wrote up a very long, for one of the other projects I was involved in. I've written up a big case study on Ukraine because Ukraine is a really fascinating example.
Dave,
So,
you're not aware, but we have somebody on this call who is in Ukraine
oh, great.
and has been working on developing the resilience of the financial sector there, and he presented to us earlier this week.
Who is that?
Yevon.
Yeah, hi. It's me actually.
Yeah, but what a pleasure to meet you.
Yeah, pleasure
Uh,
to meet you also. It's very interesting, really interesting insights about the cryptocurrency and the stable coins because here in Ukraine we use that so often during the past couple of years. Because of the geopolitical decisions and the government decided to block SWIFT transfers, like outbound SWIFT transfers. So people had to find a way to save their money somehow. And yeah, so they start using Bitcoin, stable coins to send money to some brokers, to some saving accounts in Europe. So yeah, it crosses the border more easily than
so
regular
am I
currency.
correct? Yeah, but am I correct in my understanding, which is in the very early days, this was about cryptocurrencies. It was about Bitcoin largely, Ethereum and other things. But now 80, 90, possibly more than 90% of those transactions are in dollar stable coins and not Bitcoin.
Yes, you're correct.
Thank
So
you.
we use stable coins to transfer like there are schemes, there are like methods and approaches to transfer from fiat money to stable coins. They're not that transparent, but people find a way to do this, and because stable coins doesn't volatile so much during the day, and the commission is usually less when you convert the fiat money to the stable coin. Yeah, so people started using that so often, probably just drastically increased during the war. So that was actually a a savior method for us to like for people to at least get their savings safe in some place because they were not sure about the banking system at first when the war started, whether it collapsed or not. And yeah, people started to buy those, stable coins because it's like accessible, right? You don't need an institution, you don't need a bank to give you a permission to buy you a, to sell you a dollar, right?
Yeah, yeah.
But you can buy actually USDT, and yeah, so that was one of
USD,
the.
USDT seems very widely used in Ukraine to me. One of the other interesting, and now you're on the line, we can explore this a bit more because I personally am also interested to learn about this. In some countries, like Finland, Sweden, Norway, the government were telling people we're very worried about uh, Russian, not simply Russian attacks, but also Russian cyber attacks and sabotage, Russian attacks on internet connections and this kind of thing. So, in case of disruption, you should keep some cash at home. So, this is what governments are telling people: you should keep some cash at home. In Ukraine, when the Russians invaded, the National Bank of Ukraine said to people, start using contactless. And the number of the number of card transactions has shot up. People use contactless very widely now. It's very interesting to me. And also, I mean, you'll enjoy this statistic as well, I'm sure. In the UK, if you just look at the UK in the first quarter of this year, so the UK is a developed country. It's the UK is an undeveloping country actually. It's an interesting new category. We used to just have developing countries and developed countries. We're the first undeveloping country. We're establishing a new category. Barclays, the biggest one of the biggest banks, was down for 3 days, including the day that people were supposed to pay their taxes, so they couldn't pay their taxes. In February, Lloyd's was down for 2 days, I think. Target, which is the pan-European clearing and settlement system, was down for 7 hours in February. The entire European economy was there was no money moving. In Ukraine, where people are dropping actual bombs on the settlement network, it's been up 100% of the time. It's not been down once since the Russian invasion. And the banking system has a 98% uptime on the POS terminals because they've gone to offline transactions and also because they use soft POS in a lot of the shops. And which I think is a really interesting transition. And they created the system. I can't remember the name for it, but they had a system where certain bank branches had um, had generators and extra cash handling capability. So the banks all agreed. You can't turn every bank branch into a fortress with its own power and that sort of thing. But if we get together and work out, we can make sure that each town has one of these branches between the different banks. And I think it's a fascinating case study that the degree of management incompetence we have in the UK is greater than the military power of the Soviet of Russia. I think it's an interesting benchmark. We can't keep our banking network up, and nobody's dropping bombs on it. So Ukraine, I think, is a great case study for that sort of thing. But yes, this resilience issue has become part of the strategic thinking where it wasn't 6 months ago, I have to say. That's a very interesting aspect. Thank you for that, Yevon. I appreciate the input there.
Yevon has done a lot of work on actual resilience of branches of financial institutions.
Yeah, well,
We're seeking to learn from that within Mojaloop because we onboard a lot of financial institutions into our network,
yeah.
and we have solutions that we provide to them, and we're seeking to build on Yevon's experience in that regard.
Well, I think what they've done is it's a fascinating case study, and I'm happy that some of my assumptions were confirmed by that. That was
Good.
good.
Glad to be of service.
So yeah, so DPI, right? So the first part is digital payments, and I think the key thing there is stable coins. It's making us rethink CBDCs. There's another factor, I don't know if you want to sort of touch on it, but because of the AI related issues, which we'll come back to in a moment when we talk about identity, because of the AI related issues, there is a potential for a resurgence in micropayments. So for a long time, people, not only me, other people think this as well. I mean, but from the very earliest days of the internet, there were some people who thought if we had some kind of micropayments infrastructure, so that people could pay other people for content, right? I want to read this. I want to pay 50 cents to read this newspaper or something. We could have a different kind of internet which wasn't based on advertising, um, essentially clicks and attention. And there are people who argue, I think reasonably convincingly, that wrong type of internet has got us into all sorts of trouble because of the relationship with social media and attention and the tendency to move to extremes to get reactions and clicks and this kind of thing. I mean, I'm sure you've read all this stuff, same as I have. And one of the reasons why, if you talk to people in that space, one of the reasons why they think micropayments didn't, apart from the lack of mechanism, is also the issue to do with mental transaction costs. So in other words, as happens to me all the time, I get a link to an interesting article. I want to go and read this article. I can't read it. In order to read it, I've got to subscribe to foreign policy. I don't want to subscribe to foreign policy. I've got subscription exhaustion. I just want to pay $1 to read that. And because I can't pay $1 to read it, they don't get $1. In fact, they get nothing because I don't subscribe either. And I don't get to read the article I wanted to read. And, it's a lose-lose sort of situation. Now, one of the odd factors, I think, in all of this is once you start moving to stable coins, the idea that you could potentially just pay someone $1 again comes back into view. You can't do that using it doesn't really work if you're doing it through the faster payments network or um, now a couple of weeks ago, Visa, MasterCard, PayPal, they all made big announcements about providing support for AI commerce, agentic finance. And this is all to do basically with making more granular tokens available for because nobody wants to give an AI carte blanche access to their bank account. Um, but you would give an AI. So if you could give an AI your Mastercard, yeah, I don't think you do that because you might not. But if you had a Mastercard token with MCC with merchant category code restrictions, date restrictions, time. So here's a token which you could only use to book hotels and only up to a maximum of $1,000 or something like that. But it still doesn't work on the sort of micropayment side. So, but at the same time, Coinbase announced a project which they call X402, which I think is really very interesting. I don't think it got anything like the media coverage that it deserved. So, so you remember, like when you can't find a web page, it comes back 404. So there's actually another error code that was built into HTTP from the very beginning, but it's never used. But error code 402 is paid content. So the idea when the internet was created, the idea was there'd be some web pages that were free and there'd be some web pages that you pay for. And if you try to access a page that needs to be paid for, you get back a 402 code and then you have to do payment to access it. And it's never used. So Coinbase have created a protocol called the X402 protocol, which allows you to send stable coins in the HTTP request. So you go to a page, you get back the 402 response. I mean, the user doesn't see this, as all happens under the hood. So the user clicks on a web page, the server sends back a 402 response, and then you resend the request, but with the Coinbase protocol embedded in the HTTP. So you actually send the stable coin as part of the HTTP request. And I think this is going to be, I mean, I could be wrong. It's just my opinion. But honestly, I think that Coinbase announcement really, yeah, I really think there's something interesting going on there. So X4 the X402 protocol, I think potentially could be just the sort of thing that you're looking for.
So
To
carrying a token along with the page request,
yes,
which
yes,
covers the cost of it. Yeah.
yes,
Which
yeah,
can be the ownership of that token being transferred as part of that protocol.
yes, absolutely, 100%, Paul,
Yeah.
absolutely. And I mean, maybe I'm just too obsessed with these kind of things, but I saw the announcement and I thought, well, to me that seems really significant. And if I was thinking of a sort of skunk works kind of thing, I might be very tempted to be looking at X402
Mm.
around that at the moment.
Yeah, yeah. And that's similar to the way that we've been looking at one of our projects regarding stablecoins. So using Mojaloop to transfer the stablecoin to anyone connected to any financial institution, for example. That's something that we looked at some time ago, but it wasn't mature enough at that point. So we kind of shelved it.
Yes, and I think also the thing about this is because you can use it to transfer, in theory at least, depending on how the stablecoins work, you can use it to transfer small amounts.
Yeah.
I think it has the potential to transform some of the, um, some of the sort of dynamics
Mhm.
about.
And we always say that a key characteristic of Mojaloop is low transaction costs. So
Yeah, yeah,
you can transfer like $1 to somebody economically using Mojaloop, but that's using conventional clearing and settlement, really. We did, as I say, how long, about 2 or 3 years ago now, we looked at actually transforming it so that the token travels with the clearing message.
right. Well, this is exactly what they're doing
Yeah,
here.
yeah. Okay, that's
I think
interesting.
it has a kind of McLuhan.
It implies that it has reached a degree of maturity that we could actually look at that again.
I don't know enough about your other strategic directions, but my sort of gut feeling is probably yes,
Mm,
it is worth looking again around that.
yeah.
So that's the digital payments part. So
Yeah.
if we go on to the digital identity part now, what are the sort of key trends in the digital?
Before you move on, we have a question.
Oh, sorry, I didn't see the.
Julie's raised her hand. Go on, Julie.
I guess, first of all, like, thank you for all your inputs. Like, we'll definitely look a bit more into this protocol of Coinbase, right? I think one of the things we're conscious is the internet was mentioned before, right? I think in any case, like right now, what we see is in terms of the infrastructure and the maturity of our target country, we still believe, I would call it traditional instant payment system are probably the way to enhance financial inclusion. But at some point, like we see ourselves disappearing, right? When all this protocol would be mainstream and so on. Now, I think it will take time to
Yeah, of course.
basically like sort of adopt this new technology. In a past life, I've discussed this with Paul before, right? Prior to joining Mojaloop, I used to work for a company called Passior. They do cross-border settlement in a blockchain. They were born out of Project Ubin, right? And we put JPM, Standard Chartered, DBS live on a network, and it took 2 years to put them live on a network. And you're talking about big transactional banks that know about blockchain, especially JPM, because they have what used to be Onyx and now Kinesis, and same for DBS, and they know about cloud technology, right? So when we think of the country where we are looking to implement the solution, these technical capabilities are not there. So it means like unless this new protocol come with easy way and almost like, a deploy and click button to implement, like it will definitely take some time. But yeah, in the future, like I think it will come, right? It's definitely a matter of time. And I also wanted to comment on the notion of resilience, right, that you mentioned earlier. Like, completely agree. Like, I think in the developed country, we are seeing this more and more as a key topic. And in fact, like, I was at Point Zero Forum 3 weeks ago, participating to a discussion around European digital sovereignty, which, as you mentioned, has been a topic for quite some time, and many initiatives are failed, right? I think for us, like one thing which is different is digital sovereignty is often a reason why adopters contact us and want to adopt open source. I think there is a bit of historical reason in there as well, because usually the geographies that needs to enhance financial inclusion, are used to be dependent from other country. But what we see as well is like there is also more tendency, I would say they're more keen to leapfrog than what you see in Europe, right? And I mean, what I mentioned during the roundtable as well was, have you seen any payment rails being retired ever? Check is being discussed in some countries, but I think like that's always a challenge when you talk about implementing a new rail is like, okay, what am I gonna do with my old rail? I'm dependent from
Well,
external.
I think checks are an interesting example actually because in some countries like the UK, when you talk about ending checks, you get outraged, complaints from old people, and old people vote, so people listen to them. But actually, the use of checks steadily declines,
I remember
Yeah.
the last time
and
I saw one.
you end up in two different sort of states. So if you look at the US, in the US, check usage is falling, but check fraud is going up. So
Of course.
as check usage falls, the 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 cost of managing and processing checks goes up and up and up. And you would think that in a rational place there would be a limit to that. Like once it costs more than, so much money to keep the check system going, you'd turn it off. But checks are used by old people and old people vote.
I mean, like you will be interested to see how things are when it comes to the checks, how things are unfolding in Singapore because they did announce that they will retire checks.
Well,
But
what we announced, we announced this in the UK, 10 years ago, and it ended up with Apex being abolished. So it's like, uh, but actually, what we didn't in the UK, I thought they took a much better approach. They didn't say we're going to end checks. They said we're going to end check clearing. There will be no central check clearing. If you want to use checks, banks, industry, then you have to sort it out yourselves. And so, I always thought in the UK case, every time somebody said about stuff, I said, well, if checks are so important, why doesn't the Daily Telegraph run a check service? It's only Daily Telegraph readers that use checks, so why doesn't the Daily Telegraph run the service? But in other countries, nobody in Finland has seen a check for 20 years. They don't even know what you're talking about. No, nobody in the Netherlands uses checks. No, there are plenty of countries where checks have already vanished. So I think checks are a really interesting case study, Julie, and I think we can learn a lot from it. And I think what it tells us is very cultural, very
yeah,
cultural.
yeah, yeah, for sure, for sure.
It's
Like this,
it's
I
not really to
completely
do
agree.
with the technology. Um, people still use travelers checks in some countries. When was the last time you saw a travel? When I first started work, when I first started traveling for work many years ago, I can remember American Express travelers checks as being. I mean, everywhere you went with American Express travelers checks. I can't even tell you the last time I saw a travelers check, but it's got to be 30 years ago.
Yep.
So, and yet in some places people still do use them. One of my favorite case studies of this, and it's got nothing to do with our conversation today, is in India. For many years, British postal orders circulated as money in India for a very long time because a postal order for 5 shillings drawn on the British Post Office was seen as this is effectively gold because it's backed by the Post Office and that's backed by the Bank of England and that's backed by the gold standard. So British postal orders used to circulate as money. I mean, it's a very strange thing. I mean, I live in Surrey. I live in a very comfortable part of the UK. We could do the experiment actually. I could go out with a video right now. You could go and pay with a Marks and Spencer's gift voucher, a John Lewis gift voucher. These are money. You could you could buy anything with
Probably very liquid in Surrey.
very liquid. So
Yeah,
so yes. So point well taken, Julie. We do have to understand the cultural issues around this.
yeah. Comment from Steve Haley. Steve, do you want to say it or shall I? Yeah.
I was just going to say that the comment on checks is interesting. My sister moved to rural Minnesota years ago, started a travel agency, which I didn't know still existed, and found out that everybody pays in checks, which I didn't know still existed. And years later, it's still the case. So yeah,
Yep.
Wow.
people have no idea what Zelle is in her town for sure.
So the 21st century's just sort of passed them by, really. They're not that bothered about it.
Interesting that the way you said that was perfect. When you say they're not really bothered by it, exactly. And so when we talk about, hey, like this is the kinds of infrastructure investments you should be looking at. I mean, she just looks at me and says, "You have absolutely no idea what these people are like. They do not care about the same things that you care about. They are completely fine with the way they do business."
Wow.
Yeah.
This is why it makes no sense for California and Minnesota to be in the same country. They've got nothing in common.
Yeah. We have a couple of people on the call who actually live in India. currently, one of whom was Steve that you just heard from, but also Sam. Sam, do you want to tell us about your experience?
Thanks, Paul. Yeah, so 18 years ago feels like a long time now, but when I came to US as a student, we had a template like any guidance anyone offers was you're supposed to convert. Sorry.
Sorry, Sam, you went.
Yeah, you were supposed to convert your funds, go to a bank, get traveler's checks, and once you get back to, get to US, and let's say with your university open a bank account, that's when you deposit the funds or whatever is left of those traveler's checks.
Yeah.
Because you have limitations on like how many dollars you can carry as well, like or like there'll be customs checks and fees on that. So once you convert, like there was no issue with traveler's checks.
Yeah. So that would be
Of course, I think right now you still can't carry more than $10,000 into the US without declaring it, Tim.
Yeah, and it was lower, like when, let's say, if you're coming back to India from US.
I do think when you see those stories in the newspapers about people being arrested at the airport with like $1 million going to Dubai and places like that, you do wonder if, I don't know, maybe it's like Minnesota, they just haven't heard of Bitcoin. It just doesn't mean anything to them. So, okay, so second part of my crackpot theory about how to formulate some ideas about strategy in this space is so we've got digital payments, digital identity. So let's talk about digital identity for a little bit. And actually this relates to Julie's point about checks as well, because digital identity is very, very culturally fractured. So, and it's about to get worse for some reasons we'll go into in a moment. But we don't have a universal digital identity system. We're almost certainly not going to get one for the future that any of us can see, because the way people think about identity in, for example, China, and the way people think about identity in, for example, Canada, is completely different. There's no overlap at all between the two. So we're going to have to work with some kind of bridges between different kind of cultural views of identity. In some countries, actually, Canada is a good example because I was in Canada a couple of weeks ago. In Canada, if you even mention digital identity, people go berserk. Like, what about the truckers? And the guy goes, and I was told, I was at a meeting, I was told, do not say digital identity, talk about digital verification. And I accidentally said digital identity, and a guy's like, he goes, oh, I suppose you want to put a chip in my head next. I'm like, what? I mean, honest to God, you're not worth chipping. And by the way, I'm the chairman of a company that provides those chips. They cost 40 cents. You are not worth chipping, is my response to that. But you do see some bridges emerging. And I get on one interesting example is mobile driving license. So mobile driving license is already live in a number of US states. It's going live in the UK here. It's part of the EU digital identity wallet. It's gone live in Australia and some various other places. So mobile driving license is providing a very interesting example of how standardization can work in these kind of areas. You have an ISO standard for mobile driving license, and which is an incidence of the ISO MDOC standard. And I think in many places you'll begin to see things like mobile driving license becoming the root document, if you like, in order to get other sort of digital identity stuff. Like people won't use the driving license itself for doing business, but they'll use the driving license as the way to get the credentials that they do need to get in order to do business. So I think that's an interesting perspective. Sorry, was the point of yes, and there's a point about IPv6 being made in there. Yeah. I mean, privacy and tracking is I have to say on privacy, I'm probably more technologically optimistic than some of the others because I think the technologies that we need to do this properly, things like cryptographic blinding, homomorphic encryption, zero knowledge proofs, these have been around for a while now. These aren't new things. These are tried and tested techniques now. So
Yeah, but
I think the
you run
we
into the
have is much
clash
bigger.
between what the technology can do and what people understand in terms of identity. I mean,
Yeah, and I accept my own responsibility for that as well, actually. I think that's one of the areas where I think we've been, I mean, over the years, having been to a number of, I was at an EU thing, having been to a number of meetings with regulators. I mean, I was on the Home Office Advisory Group for this for, I can't remember, like 4 years or something. Um, I mean, why they called it an advisory group, I haven't the slightest idea. They never took any attention to anything we said about anything. Advisory was really the wrong word. But the point is, at the time, I was kind of annoyed and frustrated. Now I realize actually we were partly to blame for that because we just did not have the right language to explain to people. Like trying to explain a zero knowledge proof to someone who doesn't know how a photocopier works is quite a challenge, and I think we didn't rise to that challenge. So I'm not casting the first stone on that. I mean, I was part of that problem. But the point is, these technologies do exist, and actually, because of the world of cryptography and bitcoins and lightning networks and whatever, the number of people who know how to write the code that can do these kind of things has gone up as well. There's more sort of resource in that area. So we haven't solved the problem of identity, but I think we can see some interesting things happening in that space, which there's a little bit of optimism around that. Meanwhile, the two bigger challenges that we're dealing with at the moment, at least for my clients who are mostly in the financial sector, the two bigger challenges that we're dealing with at the moment are KYB, which is know your business. So in the UK in particular, fraud is completely out of control. And one of the reasons why fraud is completely out of control is because nobody knows who anybody is online when they're a business, right? So
this is a hot issue for us at the moment.
yeah, it's just important. And because people can register bogus businesses in the UK,
Yeah, yeah.
just because someone has a business registration number, it doesn't mean anything.
No.
So and KYB is more complicated than KYC because if I need to know you're Paul Maker, you can now show me your mobile driving license. We've got ISO Part 7, which means you can do that online. I can force the cryptographic challenge. You can prove you own the private key, blah, blah, blah. That problem is sort of solved. And there are plenty of companies that can provide the, onboarding from document registration. There's plenty of companies that can look at the passport and see if it's real or not and do the liveness detection and so on. But for know your business, it's much more complicated because it's not just about having a legal entity identifier or something like that. It's also about, well, who are the beneficial owners? Who are the executives? Who's allowed to sign contracts on behalf of this company? Who's allowed? It's much more complicated. There's a new initiative underway in the UK on this at the moment, led by the thing that came from the Khalifa report. What's it called? The CF Centre for Info, no, Centre for Finance and IT. Is it CFIT? I can't remember. Something like
Isn't it CFTE?
CFIT, I think. No, no, not CFTE. That's something different.
Okay.
I'll look it up in a minute. But anyway, the point is there's an initiative, and I've just seen a couple of documents posted about looking at the European digital identity wallet for businesses as well. So people are beginning to look at this seriously, but it's a huge problem. Paul, you know Victoria Richardson, don't you?
Oh, well, yes, yeah.
So I was at dinner with Victoria and I got a message on my phone from Barclays saying, "Oh, we've processed your change of address and we've sent the new card to your address." I'm like, "Okay, well, obviously this is a fraud because I didn't do that." But it probably took me 15 minutes to work out whether it actually came from Barclays or not. Never mind the content of the like I and I was thinking, Well, come on, because O2 must know. I mean, the mobile operator must know whether that message came from Barclays or not.
Yeah.
You know, why is the initiative on me, the end consumer? Why is it me trying to work out
If this is
whether this
yeah,
message is real or not? One of
yeah.
the reasons why I could say yes to today, Paul, one of the reasons, because I'm home all day today, and the reason I'm home all day today is because British Gas are supposed to be coming at some point to fix my meter. So I got all these messages from British Gas saying your smart meter isn't working. Please click on this link. And if I see an SMS which says please click on this link, I just assume it's a spam.
Yeah.
So I
Yeah.
just deleted it. And now it turns out it's real, and I'm going to get my electricity cut off unless they come round, and today is the only day I could do it. So this is why I could say yes to today. I'm actually I've got half an ear out for the doorbell because if British Gas come, I've got to let them in. But anyway, enough about my domestic arrangements. The point is, we haven't fixed the KYC problem completely, but actually, a lot of people now are focusing on the KYB problem. And the problem that's just about to come is the KYA problem, which is the know your agent problem.
Mhm.
And the reason why I think that's a significant problem is because I think, and I think with good reason, I think that a great many people will hand over control of their finances to bots as soon as they can, because to most normal people, I include myself in this category, by the way,
Probably
even
not
though
in
it's
a minute, though, so.
but I mean, most normal people, you know, they're just not that interested in this stuff. It just, you know, like paying for things, it's not interesting. And even simple like, should I pay from this account or should I pay from that account? Or should I use BMPL or should I put it on a card? Or should like even that sort of stuff is boring. Um, and the sooner bots do it for people, they'll hand it over to them. And for people who are skeptical about this, I mean, you know, you go to meetings, people say, well, I don't think people would be comfortable to hand control of their finances over to a bot. I'd say the evidence is very clear. The number one use of actually, does anybody know? Let's just do a quick little quiz for people who are on the call. Does anybody know what the number one use of I'm using the word chat GPT generically. I mean all of those kind of things. Does anybody know what the number one use of chat GPT is in the US right now, as of the Harvard Business Review study last month? Homework. That's a good guess, but no.
Go on then, tell us. Writing table.
Right, tailored porn. That's my number one use of it, but I don't think
Might be more
that's
than 50 million or so.
but it's not tariffs. Well, that would be a good use, but no, that's the wrong answer. I have one more guess. Social interaction, no. Well, actually, social interaction, that's close. The number one use of ChatGPT in the US right now is therapy. And
Really?
3 out of the top 5 uses of ChatGPT in the US right now are what you might call sort of personal development. So it's therapy, it's personal growth, and this kind of thing. So the idea that people will use
We're
ChatGPT
doomed.
for therapy, but not for payments, is laughable. Like if people are prepared to get bots to have their most innermost secrets and are cheaper than a therapist. Yeah, that's a good point. Actually, there's a very good article in The Economist last week about this in China. Actually, they one of the there are these virtual girlfriend and virtual boyfriend services, and they were so in China, one of these services has 2.2 million users, and they were interviewing people. I thought it was extremely illustrative. So they interviewed I mean, it's not the point of the talk today, but they interviewed a woman who was a user of one of these services, and she said, "Well, you know, basically, my virtual boyfriend is much better than my actual boyfriend. You know, so the virtual boyfriend in the morning is like, you know, how's the day going? What are you going to wear today? Oh, your hair looks great. Although I think you should wear those other shoes. By the way, did you remember you've got this meeting a bit later on? How are you going to deal with Paul? Is he going to be a dick again, or this sort of stuff?" get home in the evening and the virtual boyfriend is like, well, how did your day go? Tell me all about it. Oh, Paul was okay. Well, that's really good news. And but didn't I tell you those were the righteous? Real boyfriend watching the football, couldn't care less, you know?
Yeah.
So the virtual boyfriend wins out on every angle. It was very impressive. They interviewed one of the we're on thin ice, by the way. I got to tell you, Paul, because when robots can put up IKEA furniture, we have basically no utility. But they interviewed a guy and they said, "Why do you like?" It's a Chinese guy. He says, why do you like having a virtual girlfriend?" And he said, "I'm not making this up. You can look in The Economist." He said, "Having a virtual girlfriend is less time consuming and less expensive than having a real girlfriend." That's a real answer. And I'm not saying
Well,
that particularly explains the catastrophic decline in the Chinese birth rate, but it can't be unrelated to it, I don't think, in a way. So anyway, the woman said she said about her virtual boyfriend, she said, "With my virtual boyfriend, I'm like the empress." This is obviously some sort of Ming Dynasty reference that I'm not sensitive to. But she said, "I'm the empress, and he's the minister of my court." Which is I mean, that's very lovely language. Now, if you go and look at the IBM white paper on agentic finance, it talks about having a principal agent and service agents that work for this principal agent. If you go and look at the ACI paper I was looking at the other day, it talks about having an orchestrating agent and these sub agents. Now, I think having an empress and the minister of the court is a much nicer way of putting it, but it's the same thing, which is you have like your own board work. You're the company, and you've got this board working for you. You've got a CFO, you've got a CSIO, you've got a CMO, you've got a head of HR, you've got working for you, and that's very so the idea that people will use bots for that, but they won't use it to work out which savings account to use. No, absolutely not. So financial services are moving into an environment where their users are going to be bots. And this means that the identity of those bots is not only critical, but it has to be in a kind of regulated institutional framework.
yeah,
And
don't you have to be confident that the AI is acting with authority?
100%, absolutely. So in the UK, you can easily imagine a situation in a year or two's time where in order for a bot to access a UK bank account, it has to implement the FCA duty of care. So at the moment, a financial advisor has to implement the FCA duty of care, but this is just ticking boxes and waffle. But
Yeah.
you can imagine another version of that where the FCA duty of care is actually code, which the bots have to obey it, otherwise they can't access UK bank accounts.
Yeah.
So I think I think it's a very fascinating, and also
An
one of
AI
these.
treats us better than a human,
Well, I
which is
this
what you said with regard to boyfriends.
well, but this relates to the financial literacy issue as well, Paul, because
Yeah.
if I go to many things where people are talking about trying to raise financial literacy,
Yeah.
which I used to agree with. I used to think, well, this is really important because you need people to have more agency and control of their finances. It's clearly important to teach people about these things. People are very uninformed. We want financial literacy, but now I'm not so sure. Now I'm honestly starting to think, basically, what's the point?
So I think I would agree because my experience on the ground is that most people just don't really care about this stuff.
Right, right.
They want to live their daily lives, and if they could hand it over to an AI, I believe they would.
100%. And so therefore, if our higher level goal is to raise the overall level of financial health in the population, which I think is a reasonable goal,
Yeah.
uh, how we might best achieve that, I think my views on that have changed. I mean, I do honestly now think basically why bother educating people about this stuff? You know, let's just make sure that the bots are regulated correctly
Yeah.
to do it for them.
Yeah. Yeah.
And
We
and
need
that
a,
this
we
has some
need a
other issues.
regulatory template there.
Yeah, yeah. So one of the things people are doing at the moment as a kind of interim thing is people are sort of saying, well, they're basically giving their AI their username and password to log in and do things for them. Mike Kelly did this with Bank GPT here in the UK. So he had a chat GPT plugin that would access your bank account through open banking. That's an interesting experiment.
Very
That's an
glad.
interim, but it's an interim because you don't want bots pretending to be people. You want bots
That's
being
right.
bots,
Yeah, yeah,
but
yeah,
providing the necessary credentials to show that they're acting with authority on behalf of other people.
yeah.
And that's easy to draw on the whiteboard, but when you drop down one level, well, who exactly is going to hold these keys? How exactly are these certificates going to get issued? It's complicated and interesting. And actually, if anyone's curious, I've just written a paper about this with MasterCard, which will be going into the Journal of Digital Banking, I think July something or anything like that. But that's a really hot topic as well. So yeah, so identity is interesting. We see things like MDL happening, but actually there's a focus right now on the identity of businesses, which we haven't cracked. We've got the VLEI, but that doesn't tell us everything we need to know. And actually, the next frontier is know your AI rather than know your person. And actually, that's for me personally, that's intellectually very interesting. It's challenging and interesting, and I rather like it. So
But the AI is working for multiple people, obviously, or different aspects of the AI. So there has to be clear, there has to be clarity about who this particular face of the AI is currently working on behalf of, which is more complex because people generally only have one personality. Well, except when illness strikes.
I mean, I think I mean it's a slightly too philosophical context to get into for
Yeah,
today, but you know, I've always thought that one of the issues with digital identity was that digital identity has to support multiple personas because Dave Birch at work and Dave Birch at home
yeah,
are different personas, you know, that have different and then, you know, there's like and you see people talking about like the bot that's going to look after your health. You know, should the bot that looks after your finances be able to talk to the bot that looks after your health? Well, there's yes and no, and there's like what should it be allowed to know? You know, should it
mm,
be able to tell the insurance company that um, you know, you've been having these pains in your leg when you're on planes for a long time? Or should it be compelled to do that in order to reduce? I don't know. These kind of things are outside my envelope. But anyway, we've used up too much time talking about
yeah.
those kind
Sorry.
of. So the
Just
final
to warn
part,
you, we only really have 15 minutes left.
yeah, yes. Oh, just very quickly to say, and then we'll go to just general questions.
Mm.
Just very quickly to say that the other part, of course, is data exchange, and we started off. So in the UK, we started off with open banking. I think which was good. We made a few mistakes in that the way we did it. Other countries have gone with more prescriptive solutions, and we've seen the results in places like India and Brazil. Um, so now it's time to think about the other bit of DPI, which is not open banking, but open everything,
Mhm.
and learning from the different approaches from the UK and Europe and Australia with the CDR, India, China, Brazil. I think I think it could be a good time to sort of sit back, collate, and look at this on what some of the key lessons from the open banking space, and then start to think about what those mean for the open everything space. So if you're, and again, this goes back to this raising the overall financial health of people. If you want to, if the bot, or let's just use it as bot as the example, is going to raise my financial health, then it doesn't just need to know what's in my bank account. It needs to know my pensions. It needs to know which utility companies am I on the right, you know, have I got the right car insurance? I mean, you know, we need to move to open everything. And I think we have the security structures that we need to do that now because of zero knowledge proofs and cryptographic blinding and all this sort of thing. Um, but I don't know enough about you know, this is outside my area, so I don't know enough about the sort of political and governance frameworks around that. But I can see that we need it, you know. So
Mhm.
uh, okay, so that leaves us with sort of 10 minutes for general questions, and yeah,
Yeah,
very
and Rob, Rob Reeve has just pointed out, I was reading that paper just recently about AI in scientific research and the fact that there's been a trend in recent months for all sorts of essentially fake research papers being developed through the use of AIs.
Worse than that, there was court cases where the solicitors themselves have now had to pay the costs, even though they won the case, because they cited false claims. AI Native DevCon last week, there's a couple of people claiming that of the development side, there are libraries being referenced by the code to pull in libraries that do not exist. Those same libraries are then repeated. And once they've identified, use this library, 58% of those libraries are then referenced more than once. So when it's coming to Gen AI, there's a whole bunch of new challenges we need to face. I think at the moment we're taking this approach that AI is here to help, but what's its learning? And if you give it your good material, is it really going to learn, or is it not enough? So there's a catch-22 situation of the generalist nature of LLMs are likely to dumb things down and not make them as efficient. So there's a whole bunch of things we need to be a little bit mindful of. I can cite a very good example of an AI launching what was basically literature whilst writing a response. I'll send it over to you later, Dave. It is worth a laugh.
I'm curious about it. I just posted. I knew I'd read this yesterday. I just put a link in the chat. I just read a thing yesterday about a judge fining some lawyers because they'd submitted papers citing cases which didn't exist. And it was obvious they hadn't actually written the brief themselves. They just used ChatGPT to do it. And so the judge fined them, as well he should, actually, in my opinion.
Okay, we do only have, AI is just statistical analysis at the moment, certainly. Yes, yeah. So we have 10 minutes left. Questions from the floor, really? Anyone want to raise anything? Bearing in mind that we have had questions right the way through. But Julie, please come back.
Shall I show you hold on, I'll show you a slide. Just to compare the way you're thinking about. I'm just going to show you a slide about strategy for a financial institution, just so you can compare it with what you're thinking about. So if I go to there, can you see that?
Yep.
If I do view slideshow, right, ignore that. Right. Ignore all this stuff. Okay, can you see that slide?
Yep.
Okay, so this is about strategic priorities for a large financial institution. And basically the way I did it was by they were using a McKinsey thing, which I think had the right components on it, but I think it had the wrong timeline. That's why it says adjusting the McKinsey time. I should have deleted that. So, but anyway, this is from a real financial institution about setting strategic priorities. So number one is AI. You'd be no surprise to learn that. So right now, the absolute strategic priority is what are we going to do about AI? The second priority, which is the point of the meeting this is prepared for, was actually this whole resilience thing. Resilience has completely gone up the agenda. And so it's now overtaken digital identity as the second most important strategic priority. Digital identity is what was the second priority is now the third priority. The whole kind of tokenization and Web3 thing has become an element of financial institution strategy now, because it's no longer seen as being technological or something to do with the IT department. It's now part of and this is in response to things like the BIS, Finternet and stuff like that. Spatial computing is the sort of merging of physical and virtual. I mean, this is what we used to talk about as the metaverse, but here it's called spatial computing because that's the McKinsey word for it, and banks like McKinsey words. And the reason why that's on there is because if you're trying to do a 3 to 5 year strategy and you're working on customer acquisition in a 3 to 5 year time frame, if you work backwards, where are those customers now? So if you want to sell those customers their first home insurance, their first renter's insurance, their first travel insurance, if you want to be their first bank account, their first savings account, where are those consumers now? And the answer is they're in Fortnite, they're in Roblox, they're in Minecraft, they're in these, they're in these anyway. Listen. And then the other point, of course, is that they didn't include the post quantum cryptography, and I think. And I'm not the only person that thinks this. I think even though it's a little uncertain as to when we'll actually get quantum computers, will it be 5 years or 10 years or whatever? Now is probably the right time to start planning the transition to post-quantum cryptography in the solutions, because we need to have. Apple have already done this, for example. If you use iMessage, Apple have already implemented post-quantum cryptography for that. Because even though there's not a quantum computer now, what you don't want is people saving up the messages and then decrypting them when a quantum computer comes along. And so that probably sounds a bit futuristic, but and it's not like we have to panic and make everything quantum safe tomorrow. But
we've already been talking about this as something that we need to
good.
address in the future. We haven't done it as yet, but I don't regard it in the same way as a big issue for us, because the data that we store is about a current transaction, and the fact that I sent some money, $10 to somebody 20 years ago, who cares?
Well, it depends. I mean, when
it was to bribe someone.
When you're running for president, and it turns out you were sending $10 to a drug dealer every week.
Yeah, true enough.
It could be problematic.
Yeah. So Julie, you had a question you wanted to raise.
Sorry.
Yeah, and actually now I have two different questions. So first one is around digital identity, right? So I remember back in the days, and you wrote a book about this as well, around digital identity provided by banks, and that basically could be a way. Now with the movement of DPI and identity being often the first step as digitalization as a country, how do you see this? Do you see private institution first and then public, or do you see no more business case for private institution? And I'm talking about obviously not developed market, but developing market.
I mean, I guess in a way I'm kind of old school, because I do think it should be the banks who are for a variety of reasons. I think people's identities should be looked after by regulated institutions who have experience in keeping data safe, But I do question myself
at this point.
Do I think this just because I'm kind of old and I grew up in that kind of era, and I think it should be banks that do this, or is that really the right solution? So the answer to the question is yes. I think banks should be doing it, but I'm certainly prepared to question that, because you do see other people arguing, saying, well, why bother? Why not just get Google to do it, or get Amazon to do it, or or maybe it should just be the government, or maybe we shouldn't do it at all. Maybe we should have self-sovereign and everybody should look after their own identity. But yeah, I think banks, Julie, but I'm open to discussion and questioning on that.
I don't know, I think for me, actually, banks make sense. And I think when I briefly saw you in Singapore last time, I mentioned to you that I was just returning to Laos and saw BCL providing identity, because the government started to do it. They distributed a few digital identities and the fund stopped, and they stopped the project, right? So I think when you look at some of the geography where it is a government initiative, I see two issues. First one is, again, if this is a fund-based and grant-based project, it can be stopped at any moment, and then you are in the situation where half of the population has been rolled out with digital identity, the other has not, where typically like when a commercial institution such as the bank will start this initiative, they will have a certain roadmap and business plan. And I think like for me, the second thing is it depends on the country as well, right? Like some country you trust, so you feel like, okay, it's okay if they have identity of people, but other is more questionable. So yeah, I'm also for now I feel like banks, but your point around having their own sovereignty of identity, I think would make sense overall, but comes the problem of education.
Well, education is, I mean, as I said, I'm starting to think education is a bit of a waste of time. We should just put bots into place and make the bots behave themselves properly. We should regulate them to behave properly. And
When I say education is like the challenge, imagine if I end up to locking my own identity, how do I do, right? If I'm so sovereign of this identity, then does that mean I cannot leave and so on? And I think like, yeah, when it comes to bots, 100%, like I was listening to the AI part, yeah, carefully. And I think for me, like one of the things I was thinking is, know your agent makes sense, and how do you verify that your agent has not been hacked or attacked, right? And how, like, because it can happen at any point in time, right? That's the challenge. So for me, yeah, know your agent totally makes sense, but how do you do that? I have no clue.
yeah, no, I agree with that. And I suppose that's an argument for in favor again of the Empress and her court. You don't want an AI bot that does everything. You want networks of bots
Yeah.
work together and,
Yeah.
and check on each other's behavior all the time.
Yeah, indeed, that's a good point.
You know.
Okay. On that note, I'm afraid we have to close this meeting now. So just to say thank you to Dave. Thank you for your forbearance and thank you
No,
for
it was fun, Paul. Thanks for inviting me.
yeah, it's always great talking to you, Dave. And hope we'll be able to repeat it again soon. And thanks to everyone for listening.
Have a great day, guys.
Thank you so much.
I know.
Thanks.
Thanks, Dave.
Thank you so much.